Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Joining us now on the program to take a closer look at Nvidia is Louis Navellier, who is chairman and founder of Navellier and Associates. So, Louis, there wasn't a lot of nervousness leading into this print by Nvidia because the hyperscalers had already told us that they were, buying big time Nvidia chips. But going forward, is that still the most important thing to watch, or are there some other metrics that you have that will tip us on if and when business actually slows?
Well, certainly with 262% sales growth, obviously, they're not going to be able to sustain that much longer. Even Supermicro Computer is slowing their sales. They're going from 200% to 145% next quarter. But the order book is strong. The margins are ridiculous. The Blackwell chip is finally going to get implemented. That's give it a nice little turbo boost. It really boils down to how fast they can put all this in the cloud and build all these great new data centers so we can do AI via the cloud. And of course, there's also a rush to boost electricity to fuel all this. And so there's a lot of plays associated with AI, but it remains very healthy. And we just went into extra innings on the AI rally today.
What is your sense on the degree to which AI is being adopted? How quickly that's occurring? Jensen Huang, during the conference call with analysts, was talking about an expansion into consumer internet companies, enterprise, sovereign AI, automotive, healthcare. I mean, it seems to be spreading out. Do you have a sense of the rate of change or the rate of adoption?
Oh, it's unbelievable. I think the biggest problem is the way they're doing AI. Not everybody should do it the really fancy way. I have friends that are in the chip business and they build AI chips for Samsung, things like that. And essentially, when you look at everything, you can get errors. So you want to look at correlated things. And, the intelligence community missed 9/11. They missed October 7th. So you can get what we call garbage in, garbage out if you look at too much stuff. So it's very important when they implement all this AI that they just put in the things that are correlated versus the kitchen sink.
You're talking about the training data that they're using to create these models, right?
Correct. And I build stock models, and I'm very proud of them, and they're online free, and we grade stocks A, B, C, D, F, and so I'm kind of a programmer to begin with. But what's interesting is when you build a model, the more factors you put in, the more errors you're going to make. So my friends that are building chips now, it's for consumer products, they're basically, chips are mimicking our pets in our household. Our pets plot against us and figure out who we are and then try to condition us, and so that's what consumer AI will be doing, the new Alexas of the world and things like that. And I just think it's important they don't go overboard and do it like the NSA or CIA.
Let's talk a little bit about some of these second, third, and fourth derivative plays. Probably in the most immediate, we can look at some of the Asian suppliers. For sure, TSMC is a big one. Obviously, Wistron and SK Hynix and Samsung. Are you playing those as well? And if so, what do you like?
No, I'm not. I'm playing the companies that are making the electric demand go up. So that would be something like an Eaton, an EMCOR, a Quanta Services, Vista Corporation, and I'm helping companies secure the cloud. That would be things like CrowdStrike, Nuanix, that's NTNX, Parsons, and Vertiv Holdings. So it's all cloud and security. That's kind of where we're at.
So we also got news of a 10-for-1 stock split and an increase in the dividend of 150%. Would Nvidia be better served taking that money and to plowing it back into R&D, or do you think they're adequately taking care of kind of what's necessary on the research and development front?
Oh, yeah, they spent over $2 billion on that Blackwell chip. That's why no one can compete with them. And I mean, if AMD wants to even try to compete with them, they're not going to. And Apple and others have announced they're going to get in the AI chip business, but that's the cheap AI stuff. It's not as fancy as what Nvidia does. So I think Nvidia has a monopoly. They're going to continue to have a monopoly to the end of the decade. Jensen said he wants to double the processing speeds every year, and then eventually at the end of the decade, they'll have chips in basically an appliance-sized device that will replace data centers. All these chips have to be liquid cooled, and they run hot, and they suck a lot of electricity. So the electricity play is my big play at this moment.
Yeah, and you mentioned Eaton and Quanta Services and companies like that. What about on the cooling side, which you just referenced? A company like Carrier or general HVAC companies that supply cooling systems to data centers. Is that also in your target range?
Not yet, but I can tell you it's hard to get air conditioners. I'm in Florida now. We ordered some. It's going to take a while. Most of them come from Monterrey, Mexico, although the Korean ones are coming in hot and heavy. But they put the server farms, a lot of them in the desert, so they can open them up at night and they actually cool themselves because the deserts get cold at night. And I have a home in Reno where Apple and Google have server farms there, and but the server farms are always going to go where there's cheap electricity. No, Nvidia and Supermicro should be about 80% of your AI investments, and those two stocks are about 20% of my portfolio.
Not AMD.
Right?
Not AMD?
No, because they just don't have the results. Yeah, sorry. I mean, I know they're rallying in the wake of what Nvidia did, but they just don't hit my criteria. I'm pretty picky. I got to have my sales growth, my margin expansion, positive analyst revisions. I got a surprise. So they got to guide higher.
What about the memory chips that a Micron would develop to go hand in hand with an Nvidia product?
Not yet. I have friends in Boise that are ex-Micron people. That's my buddy who's building chips for Samsung. And Micron has not shown up on my radar, although it has improved dramatically.
All right, Louis, thanks so much for joining us here live on the program. Louis Navellier, chairman and founder of Navellier and Associates. The chipmaker Nvidia announced revenue up 260% from the same quarter last year. It also had a big beat on the bottom line, and second quarter revenue will be about $28 billion. Joining us now for some discussion is Vlad Savov, Bloomberg tech editor. So Vlad, that 260, that means that revenue tripled, more than tripled from last year. Profit tripling as well. Who does that?
Nvidia. The hilarious thing, Brian, is we're back here doing this all over again. I mean, 3 months ago, we're having a conversation. Maybe we're previewing Nvidia earnings, and we were saying expectations are sky high. Can Nvidia meet them? And it did. He's doing it all over again, and maybe 3 months from now, we'll do it all over again. It's we can't see the top of this cycle, the thing that's happening right now. It's worth saying. I mean, I've been covering Nvidia since it was still a purely gaming company. Gaming revenue was estimated at $2.6 billion. It came in at $2.6 billion. This is all about AI. This is all about data centers.
No doubt about that. And I think we can say safely that this is pretty much a monopolist, right, at this point. There's no chip company that can touch Nvidia.
That's a bit of a tough term to put on it because it's not by any sort of unfair competition. The competition is wide open. If anybody wants to compete with NVIDIA, and you can be sure that companies are trying, AMD is the closest competitor, they can try it. It's just the technology is that clearly ahead. Everybody is deploying NVIDIA's AI acceleration protocols that it has developed itself. It has developed this with billions of dollars of investment and over many years, and people have just adopted this technology because it's the best that there is out there right now.
Yeah, there's just so many superlatives with this. It's not like we're, all pushing NVIDIA. It's just one of these things. It tends to be a freak of nature here at this point. Data centers, you mentioned, that's the big thing. It's 85 to 87% of total sales. We've seen the stock triple in a year. And we mentioned that revenue and profit had tripled. And so it means that the stock is really no more expensive now than it was a year ago. The forward PE is 35.
You're right, Brian. I was just looking at our charts on the terminal, and one of the things that stands out is that the quarterly sales now are bigger than Nvidia had annual sales as recently as 1 or 2 years ago. It really is just a skyrocketing of sales. And it's worth saying, I mean, we keep talking about AI on a daily basis. It's the predominant topic in tech. And one of the highlights actually for me from Nvidia's earnings is that still about 40% of these sales are coming from the biggest US tech companies. You're talking Meta, Google, Microsoft, all the ones that have said AI is our big priority, our big thing that we're doing. And they're investing most heavily in Nvidia chips. If you want to have some sort of balance here, there is a question to ask, when will those companies say we have enough of these chips? When will those companies start tapering off that spending and start investing in more software investment?
Well, look at the story earlier in the week with Amazon delaying the purchase of the most, let me call it the recent generation in favor of withholding funds so that they could buy the next generation of these chips. So there's going to be this constant cycle of upgrade, and that's going to be driving a lot of the sales growth going forward, I would imagine. But, okay, so maybe the company is not a monopolist in the strictest sense of the term, but if you dominate the market to such an extent, you do have enormous pricing power, right? And so they are in a position to raise prices on the next generation of these advanced chips in a way that is going to continue to feed that revenue growth.
That's right. Perfectly fair to say. One of the things that CEO Jensen Huang did say after the earnings is that the company is trying to broaden out its customer base. You got to keep in mind, we're here in Hong Kong. Asian companies are just as eager to get a hold of those chips. I mean, the situation right now is Nvidia has far more customers than it has chips to supply. When you talk to TSMC and the likes, there is still some constraints in advanced packaging to put these chips together. So Nvidia is very much in an enviable position today.
Yeah, I heard Mike Wilson from Morgan Stanley say that the only thing about AI is that, we haven't really seen it in the sales outside of NVIDIA. I'm not sure that's really true because you are seeing a lot of companies report higher revenues and stronger growth as a result of, let's say, power supply or cooling systems or whatever. But how long is it before this really does trickle down to the average Joe?
Honestly, it really is a matter of the software side of things. We just saw Microsoft announce its so-called Copilot Plus PCs. Those are based on Qualcomm chips almost entirely. That's one aspect of the chip market where NVIDIA is not a player. Qualcomm is trying to get in on Intel's turf and basically take over as the leader in PCs, because when you think of PCs, it's really laptops nowadays. That's a leading thing. They are the ones that are going to show us over the next few weeks and months how compelling the AI features are going to be for end users. That part really hasn't come to fruition yet because it's still really early. Everyone is just buying the NVIDIA chips to train stuff. But the next wave of innovation and the next wave of chip buying, as far as AI goes, is going to be in the end devices, the stuff that Qualcomm is selling.
Yeah, inference. Vlad, thanks very much. Vlad Savov, Bloomberg Tech editor, with us. We are joined on the line by Lorraine Tan, who's Director of Asia Equity Research at Morningstar on the markets. So at the moment, Lorraine, we're not seeing this huge follow-through from the optimism surrounding NVIDIA to the broader markets in Asia, but it shows you these are big markets and there are a lot of factors.
Yes, that's right. So, while, NVIDIA does provide some relief, that at least that's not a risk trigger, I think the broader events are the ones that is going to drive Asian market direction. And first and foremost is people are still wondering when the Fed's going to cut, what the inflation numbers are going to look like coming up that would allow for that. So I think that still has to be a key factor that the markets are looking for in terms of direction.
Lorraine, one of the big deals here in the States after the bell was obviously the Nvidia earnings shattering on estimates for sales. I mean, so the guidance here very positive for the current quarter. This is something that is really kind of a revolution in the U.S. I don't know how you're seeing AI play out in parts of Asia. China, let's put that aside for a moment. We can talk about what you're maybe seeing in Singapore. And if you could tie in the issue of energy, because I know you spent a number of years over the course of your career focusing on energy and utilities, and we know that AI, generally speaking, is very energy intensive.
Yeah, so I think there's a little bit of a difference here because Nvidia's benefiting because it's got the platform to really extract the value from all the AI activities that are going on. So you've got obviously some flow through to the chip companies, but really the chip cycles are going to be driven by the broad industry. And for us, we do like that space, but it's going to be partly driven by the handful replacement cycle that we expect in 2025. So there are slightly different nuances there. In Asia, I think it's harder to pinpoint specific companies that are going to benefit from what's going on in AI. So even within, let's say, China, when we look at what's going on in the cloud space, it's really the national telecommunication companies that are benefiting. But even then, the percentage to their revenue is not as huge as what we want it to be. Obviously, for Baidu, this will become a growth driver for them in the future, but it's still not as significant, or it's harder for us to tell whether they're going to be able to make a profit out of it so soon.
We've looked a lot at some of these derivative markets and areas, sectors. Electrification is a big thing. The independent power producers, in addition to the actual utilities themselves, and then you have, the HVAC companies. You have industrials generally, and a lot of the enthusiasm has spread to a lot of different sectors. But investors are still looking for companies like Snowflake that stumbled at one point in the future and are undervalued. Are you finding companies that are undervalued, or are you sort of swamped by all these markets with all these gains?
Actually, we still see value in the markets, even within the U.S. that we think is slightly overvalued. We're looking at things like even Fortinet that we have a buy call on. These are stocks that are laggards, but we think that there's still upside potential for sure. Even healthcare names that are not within that haven't benefited from the obesity drug run-up, there's still value there that will come back to the broader pharma space as well. Within Asia, definitely, we've seen value. China remains, in our view, somewhat undervalued despite the recent run-up. Probably would be a little bit more cautious in jumping into more China real estate names that have come up from the bottom. But definitely, we still like the chip sector for the most part. In Japan, we like the lagging factory automation names. They also benefit from basically a cyclical improvement, basically inventory levels coming back to normal.
So chips, I'm also thinking South Korea. We just had the BOK raising its growth forecast for this year to a level of 2.5%, up from 2.1%. The last projection was made in February. How are you feeling about the South Korean market, particularly the chip makers like Samsung and SK Hynix?
Yeah, we do like Samsung. I think we still have a buy call on Samsung, but we are more so focused on the laggards, regardless of where they are. So even within that space, the industry leader, TSMC, we still like. We think there's still upside potential there. MediaTek on the Taiwan side is another name that we prefer. I think overall, we're probably seeing a little bit more value in some of the Taiwanese names on the chip side relative to, let's say, specifically to Japanese or Korean chip makers at this stage.
And, we've talked a lot this morning about BHP and Anglo, and it's interesting that, BHP is looking at copper mining, but not wanting to do it itself, but buy Anglo. I'm curious what your thoughts about M&A. It's been picking up a little bit here of late. What sort of message does it send?
I think what it means is that for companies are still holding a lot of cash, and I think that's across the board. The number of companies that we see, and for those where you have equity values also be at relatively low levels, that probably means it's a good time to look for acquisitions, and we do expect that to basically continue, particularly for those companies that do have the cash flow to afford it. Definitely, debt levels, debt servicing is a little bit tougher now and getting funding is a little bit harder now. So I think where you're probably seeing a little bit more appetite by some of the companies to consolidate.
We were just talking here in New York about a report, Citigroup considering reducing some of its office footprint in Singapore. Remote work is obviously gaining traction. How is the commercial real estate market there in the Lion City? Very quickly.
Tier one, basically the top grade real estate is still highly demanded. If you look at the CBD areas, occupancy rates are still high at about 98%. So we don't actually expect any decline in rental rates, unfortunately, for us.
Lorraine, thank you so much for joining us. Lorraine Tan, there, Director of Asia Equity Research at Morningstar.
This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.